Welcome to my channel, your ultimate destination for mastering finance and business management. Whether you're looking to grow your wealth, build your business, or sharpen your skills, we've got you covered with practical tips, expert insights, and actionable strategies. Let's embark on the journey to success together. Worst Canadian ETFs ever seen, BTCY ETF. Are you ready? What is BTCY ETF? Why is it controversial? A promising concept or a risky gamble? BTCY ETF is a Bitcoin-focused Canadian ETF that combines exposure to Bitcoin with income generation through covered call strategies. Managed by Purpose Investments, BTCY has gained attention for its unique offering. Investors can benefit from Bitcoin's price movements while earning monthly income. However, the ETF strategy comes with significant drawbacks, such as cap gains, high fees, and reliance on a volatile asset. These factors make it both intriguing and controversial for Canadian investors. Example, imagine BTCY ETF as a car with a speed limiter. While traditional Bitcoin investments can race ahead during bull markets, BTCY investors are stuck at a cap speed, unable to fully capitalize on Bitcoin's explosive growth. How BTCY's covered call strategy works. Understanding the core mechanic of BTCY. BTCY employs a covered call strategy to generate income. In simple terms, it sells call options on a portion of its Bitcoin holdings. While this earns premiums income, it also limits the ETF's upside potential, as the Bitcoin held must be sold if the call options are exercised. Covered calls work best in stable or slightly bullish markets but struggle during strong bull markets or periods of high volatility. This makes BTCY less suitable for investors seeking significant long-term growth. Example, imagine Bitcoin rises from $30,000 to $50,000, while a Bitcoin holder enjoys a $20,000 gain. BTCY's capped upside might only allow for a fraction of that increase due to the covered call obligations. BTCY's fee structure. Are you paying too much? The hidden costs that can erode your returns. BTCY charges a management expense ratio MER of 1.45%, significantly higher than traditional ETFs. While the high fees are justified by the complexity of managing a covered call strategy, they can have a profound impact on long-term returns. Over time, these fees compound, reducing the overall growth of your investment. Comparatively, other Bitcoin ETFs like BTCC have lower fees, making them more cost-effective for investors. Example, let's say you invest $10,000 in BTCY for 10 years with an average return of 8%. The 1.45% fee will cost you over $2,500 in lost returns. Meanwhile, a similar investment in BTCC with a 0.95% fee saves you nearly $1,000. The yield trap, high returns or hidden risks. Understanding BTCY's dividend yield. BTCY's high dividend yield is one of its main selling points. Investors receive monthly payouts, which are attractive for those seeking regular income. However, this yield is not guaranteed and comes at the expense of long-term growth. The yield is generated by selling covered calls, which cap the ETF's upside during Bitcoin bull markets. Additionally, high yields can be unsustainable in volatile markets, further increasing the risk for investors. Example, an investor in 2021 received consistent dividends from BTCY, but missed out on Bitcoin's massive rally. The ETF's yield masked the true cost, sacrificing significant growth potential. Bitcoin volatility and BTCY's weaknesses. Can BTCY handle Bitcoin's wild swings? Bitcoin's volatility is both its strength and weakness. While traditional Bitcoin holders can benefit from price surges, BTCY's covered call strategy limits its ability to capitalize on these gains. During bear markets, BTCY is further exposed, as Bitcoin's price drops directly impact the ETF's underlying value. The combination of cap growth and exposure to downturns makes BTCY less resilient to Bitcoin's price swings. Example, during Bitcoin's 2020 crash, BTCY investors faced double losses: the declining value of Bitcoin and reduced income from its covered call premiums. BTCY versus competitors. Which ETF stands out? How BTCY compares to BTCC and EBIT. BTCY competes with other Canadian crypto ETFs like BTCC and EBIT, while BTCY focuses on income through covered calls. BTCC and EBIT prioritize pure Bitcoin exposure. BTCC offers lower fees and direct exposure to Bitcoin, making it ideal for growth-focused investors. Meanwhile, BTCY appeals to income seekers but sacrifices long-term potential for short-term payouts. Example, an investor holding BTCC during Bitcoin's 2021 bull run would have seen a 60% gain, while BTCY's cap returns limited its growth to around 40%. Tax implications of BTCY. What you need to know about taxes. BTCY's monthly distributions are taxed as income in Canada, which can significantly reduce net returns for investors in higher tax brackets. Holding BTCY in a TFSA or RSP can mitigate these taxes, but investors in taxable accounts should be cautious. Example, an investor earning $1,000 annually in BTCY dividends could lose $300 to taxes if held in a taxable account. In contrast, holding it in a TFSA allows for tax-free growth. The future of BTCY ETF. What lies ahead for BTCY? BTCY's future depends heavily on Bitcoin's performance and the sustainability of its income strategy. Regulatory changes, market volatility, and investor sentiment will play crucial roles in determining its success. Example, if Bitcoin adoption accelerates, BTCY's cap strategy might lag behind competitors offering pure exposure. However, its income focus could remain attractive for retirees and conservative investors. Final verdict on BTCY. Is BTCY worth the risk? BTCY is a niche ETF designed for a specific type of investor. While its income strategy appeals to some, its high fees, cap growth, and exposure to volatility make it unsuitable for others. Investors must carefully consider their goals and risk tolerance before investing. Example, for a retiree seeking monthly income, BTCY might work. But for a 30-year-old looking to build wealth, traditional Bitcoin ETFs like BTCC are likely a better choice. Who should invest in BTCY ETF? Is BTCY right for your portfolio or a risk not worth taking? BTCY is not a one-size-fits-all investment. Its unique structure makes it suitable for some investors while being completely inappropriate for others. Let's break down the profiles of who should and shouldn't consider adding BTCY to their portfolio. Who BTCY is for? Income-focused investors. If you're looking for monthly payouts and are comfortable with moderate risk, BTCY might appeal to you. Conservative Bitcoin exposure. BTCY's cap strategy can provide a more predictable income stream compared to directly holding Bitcoin. Retirees or near retirees. For those who value steady income over aggressive growth, BTCY can be a useful addition. Who should avoid BTCY? Long-term growth investors. If your goal is to maximize returns over decades, BTCY's capped upside limits your potential gains. Risk-averse individuals. Despite its income generation, BTCY remains tied to Bitcoin's volatility, making it unsuitable for low-risk portfolios. Taxable account holders. Due to its tax inefficiencies, BTCY can lose its appeal for those investing outside of tax-advantaged accounts. Example, imagine Sarah, a 60-year-old retiree, and Tom, a 30-year-old professional. Sarah benefits from BTCY's monthly income, supplementing her retirement, while Tom loses out on long-term growth by capping his returns. BTCY works for Sarah, but not for Tom. Lessons learned from BTCY ETF. What BTCY teaches us about investing in specialized ETFs. BTCY is a case study in the pros and cons of niche ETFs. It highlights the importance of understanding the strategy, fees, and market conditions that affect performance. Key takeaways from BTCY. O strategy matters. Covered call strategies are not inherently bad, but they are not suited for all market environments. O fees add up. Always compare expense ratios and ensure the potential returns justify the costs. O know your goals. BTCY's income-first approach might not align with growth-focused investment plans. BTCY hidden gem or a ticking time bomb. After diving deep into BTCY, it's clear that this ETF is not for everyone. While it offers a unique mix of Bitcoin exposure and income, its limitations make it a high-risk, niche product. What do you think of BTCY? Would you add it to your portfolio? Or do you prefer other Bitcoin ETFs? Let me know in the comments below. Don't forget to like, share, and subscribe for more in-depth analysis of ETFs and investment strategies. Thank you for watching Sapricule Finance. If you found this video helpful, don't forget to like, share, and subscribe. Hit the bell icon so you never miss our latest insights on finance and business management.